Russia's invasion of Ukraine constitutes the biggest threat to peace and security in Europe since the end of the Cold War. Russia took almost 50 years building its energy market in Europe, and President Vladimir Putin destroyed it in under 50 years. Funding a replacement will be impossible. Is Russia suffering because of Putin's deeds? Well, Russia has found an alternative market for its crude oil, mostly in India. Switching sides of refined products, and perhaps even more so natural gas, will take years and come at a huge cost. That is, even if it's possible to create markets as the world turns away from fossil fuels. When Moscow troops invaded Ukraine on February 24th, its European energy customers got scared. A market that soaked up nearly 2.5 million barrels a day of crude, another 1 million barrels of refined products, and 155 billion cubic meters a year of natural gas all has disappeared. Crude flows from Russia to other parts of Europe began to dwindle soon as Putin's troops crossed the border. By December 5th, when a European ban on seaborne imports of Russian crude came into effect, they were already down to a trickle with Bulgaria, which secured a temporary exemption, the only remaining market. A flow of refined products is following the same trajectory ahead of similar sanctions that came into effect on February 5th. Russia's European market for natural gas has also been lost. A huge network of gas fields and pipelines, which were developed at a cost of hundreds of billions of dollars since the first gas crossed the border into Austria in 1968, has been thrown away. It was estimated in 2017 that $100 billion had already been invested in the development of gas reserves for Russia's Yamal Peninsula, most of which were tied to Europe through pipelines, including those whose running beneath the Baltic Sea linking Russia to Germany. That figure was expected to double by 2025, and much of that investment now looks redundant. Russia may be able to salvage some sort of energy relationship with Europe after the war ends, which it definitely will, but it's unlikely that the EU countries will ever allow themselves or need to be as dependent on Russian gas as they were just a year ago. Governments and consumers in Europe are at last getting serious about demanding restraint and energy efficiency. While record prices paid for gas and electricity have spurred investment in renewables, and the first serious attempts to change the way retail electricity prices are formulated, taking account into the dwindling share of fossil fuels in power generation. At the moment of the Soviet collapse, Russia inherited a budget deficit that was conservatively estimated at 20% of GNP. It faced the threat of hyperinflation, and economic growth was negative, plus there were shortages throughout the economy. Foreign reserves were virtually non-existent, and it was racking up a mountain of international loan commitments. The state faced the realistic threat of famine and bankruptcy. In the decades that followed, however, Russia traveled a long way down the road of economic and social modernization. This was partially due to the global high prices for its exports. The country also benefited from gold macroeconomy policy and the stewardship of Elvira Nabiullina, the smart and independent chairwoman of the Central Bank of Russia since 2013. Despite Vladimir Putin's propensity to use public assets for his own personal benefit and that of his former KGB cronies, by February 2022, the day before Putin's invasion of Ukraine, the country had paid off its debts, built up sizable foreign reserves, and for the most part, maintained a budget surplus. If 30 years of uneven post-communist recovery had seen Russia's resurgence, we are now seeing its ruin. Vladimir Putin's autocracy has not just wrought havoc on Ukraine, it has wrecked Russia too. Putin's unjust and ill-conceived war has erased the gains of the last 3 decades. Russians have been rendered international pariahs, unable to travel abroad easily, and suffering under the heaviest sanctions ever imposed anywhere in world history. The burden of Putin's war on Ukraine will be borne by Russian citizens for decades, if not longer. The damage done to Russian society, the economy, its military, its political development, and its international reputation will far outlive Putin. The most obvious catastrophe that Putin has brought about by invading Ukraine will always be economic. More than 1,000 international companies had curtailed or shuttered their businesses in Russia by the 8 weeks of the war. More will surely follow. Europe will move off its dependence list on Russian oil and even its overwhelming dependence on Russian natural gas. And of course, it will take 2 or 3 years for liquefied natural gas terminals to be built in Germany in particular, and once those terminals are built, European customers will likely never need to buy natural gas from Russia again. Under Putin's disastrous leadership, Russia itself has proved beyond doubt to be an unreliable supplier. Short term, the transition will hurt Europeans as gas prices continue to rise. The European market is gone not just for now, but forever, and with it goes the much-needed revenue to the Russian budget. Russia's oil companies have succeeded in diverting deliveries of crude oil shunned by traditional European buyers, thanks in very large part to the first of Indian refiners for cheap feedstock. But the diversion has come at a huge cost to Russia and its oil industry. Big discounts, which appear to have been as high as $35 a barrel, equivalent to a 40% price cut, have been required to penetrate the Indian market. By the end of 2022, Russian barrels accounted for about 1/4 of India's crude imports, displacing cargoes from the subcontinent's traditional Middle Eastern suppliers, Saudi Arabia, Iraq, the United Arab Emirates, and Kuwait. Diverting the crude flows to the thirsty market with a big refining sector capable of processing the relatively high sulfur crude exported by Russia is one thing, but diverting refined products into that market is quite another. It's pretty sure that there are other countries willing to snap up cheap Russian diesel while exporting their own locally produced fuel back to Europe, but they will require discounts big enough to make the trade profitable, which is another cost to be borne by the Kremlin and its oil companies. But oil, whether crude or refined products, has a big advantage over natural gas. It can be easily and cheaply transported by sea. For most of the past 55 years, Russia has looked westward for its gas buyers. Huge pipelines, thousands of kilometers long, linked fields, first in Siberia and more recently on the Yamal Peninsula, to buyers in Europe. In the past decade, Russia has begun to look east for new markets for its gas, and the Power of Siberia gas pipeline now carries the fuel to China. But this has come from new deposits, more than 1,300 miles east and 600 miles south of the Yamal fields that used to supply Europe, but now sit underused. Russia's state-owned gas giant Gazprom PJSC put the official cost of the Power of Siberia and its associated gas fields at $55 billion. An independent assessment came up with a figure almost twice as large, an investment, it argues, that will never yield a return. There will be a limit to how much more Russian gas Beijing will buy. While its energy needs are vast, it will be very wary of repeating the mistakes that some European countries made by becoming too dependent on Moscow. So Russia will need to look elsewhere to replace its lost European markets. It would like to supply India, another rapidly growing nation with vast and rising energy needs. But piping natural gas to India will be even more difficult than getting it to China. The route would either have to cross some of the highest mountains in the world, or pass through Afghanistan and Pakistan. Either route would cross several other countries, making construction and operation more costly than the link between two nations with shared borders. Putin's war in Ukraine has cost its European energy market, and it won't be easy to replace. The war has also created a great deal of geopolitical turbulence and has a host of problems in the global economy. Since the war began, prices of energy and agricultural products have started to rise. Instability in the global economy has different effects on different regions. One of the most important regions affected by the war is Central Asia. Energy and food constitute a large part of household consumption. Prices of agricultural products rose after the Kremlin imposed a ban on the grain exports to members of the Eurasian Economic Union. In addition to food prices, high gas prices negatively impact households and increase living costs. Gas plays an important role in the energy mix of Central Asian countries, especially Uzbekistan and Turkmenistan, while high prices directly affect people's well-being and purchasing power. To sum up, despite a few positive surprises, the war's negative impacts on regional economies outweigh any incidental benefits. Major industrialized economies are girdling for supply constraints in 2023 as well, if not for years after that. Costs for natural gas and heating fuel have ebbed as economic activity declines. People are still struggling as prices have increased to record hike in years. Spencer Dale, an economist, says, "The energy focus on energy security as a result of the Russian-Ukraine war has the potential to accelerate the energy transition as countries seek to increase access to domestically produced energy, much of which is likely to come from renewables and other non-fossil fuels." Even though Russia has found alternative markets for its crude oil, switching sales of refined products and natural gas will take years and come at a huge cost. Is Russia heading towards a possible doom? Let us know your thoughts in the comments.